Welcome to Market Momentum AI and Analysis. Let's dive right into what's moving the markets this week. So, we're seeing this really fascinating split happening in the markets right now. I mean, on one side, you've got stocks just soaring, hitting all-time highs, showing a huge appetite for risk. But then, on the complete other side, traditional safe havens like gold and silver, they're pulling back, and pretty sharply too. So what in the world is behind this divergence? Let's get into it. Okay, so first things first. Let's look at the big picture. The major forces that are really pushing and pulling on everything right now. It really is like a tug of war out there. So in the positive corner, you've got lower than expected U.S. inflation. This has everyone hoping the Fed might start cutting interest rates, which, makes money cheaper for companies and can really boost stock prices. On top of that, we're hearing about some constructive talks between the U.S. and China, and that always helps ease those global trade tensions. But, and it's a big but, on the other side, you have the lingering risk of a U.S. government shutdown. That's a major headwind for sure, and it's just adding this layer of uncertainty to everything. All right, let's dive into our first major story, that incredible momentum we're seeing in U.S. stocks. Right now, the bulls are clearly in charge. I mean, you just can't deny the strength of this rally. We're talking about the Dow Jones, the S&P 500, and the Nasdaq. All of them breaking out to new all-time highs at the same time. And get this, the S&P 500 even managed to close above a really critical technical resistance level. For traders, that is a very, very strong signal. And here's what's really important to understand. This isn't just a few of the big tech giants pulling the whole market up with them. Nope, this rally is broad-based. We're seeing smaller companies, the ones in the Russell 2000 index, they're getting in on the action too. When analysts see that, they see widespread investor confidence. It's a sign of a really healthy and hopefully sustainable uptrend. Okay, let's totally switch gears now, because it's a completely different story over in the world of precious metals. While the stock market is popping champagne, gold and silver are, well, they're really feeling the pressure. We've seen a pretty significant pullback. So that begs the question, right? What exactly triggered this sharp sell-off in gold? Well, to find the answer, you've got to look at the technical charts. So let's walk through the signals that had analysts on alert. First up, after a really strong run, the market indicators were screaming overbought. Basically, the price had just gone up way too far, way too fast. Then you get this classic double top pattern forming on the charts, and if you know charting, that's a huge warning sign that a reversal could be coming. The final nail in the coffin? The price broke, and I mean decisively broke, below its key rising trend line. When you see all three of those things line up, well, that was all the confirmation traders needed to start heading for the exits. So the big question is, where does it go from here? Well, traders have their eyes glued to a couple of key support levels. The first line of defense is right around that 40.70 mark. If that doesn't hold, the next major level is way down near 38.96. The key thing to remember, though, is that for now, the immediate risk for gold is still pointing down. And that brings us to crypto. The crypto market seems to be caught right in the middle of all this, sitting at what looks like a really critical juncture. All that bullish momentum we were seeing? It's pretty much stalled out. The market is actually broken its recent uptrend, and now we're just watching major assets like Bitcoin and Ethereum struggle. They just can't seem to reclaim those key technical levels. It's a pretty clear sign of weakness, honestly. And this is where a word of caution from the analysis really hits home. The quote is, "In this market, when a sell-off comes, it can be severe. It is crucial to manage risk." And man, that just perfectly highlights the kind of volatility we're talking about and why a very careful approach is needed right now. So if we look at the big players, Bitcoin is still stuck below its key trend line. Ethereum is pinned down under a major resistance point. Now, XRP is, well, it's kind of interesting. It's showing a little bit of relative strength compared to the others. But even with that, the whole market is just in such a weakened state that jumping into new positions right now is, it's considered pretty high risk. Okay, so we've got stocks up, metals down, crypto in limbo. Let's try and tie all these different threads together and look at the key takeaways. All right, here's the bottom line. For U.S. stocks, the outlook is bullish. That broad-based rally we talked about, it really points to more strength ahead. For precious metals, it's bearish. Those key technical breakdowns were a clear signal of a reversal, and that downtrend could definitely continue. And for crypto, the big word is caution. The market is weak, it's indecisive, and this is absolutely a time for managing risk, not for aggressive buying. So there you have it, A really clear split. It's risk on for stocks, risk off for metals, and just extreme caution for crypto. Thanks for joining us. Your subscription and likes will be appreciated.